Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com.
I love mornings like this. You wake up before dawn and the S&P futures are up 2%. And before the stock market even opens, they're up 3%. Could be on some European optimism. We'll see. People wonder why Germany appears to be playing a game of chicken with the bond vigilantes. It's simple. As I wrote on September 12th, Germany is controlling the game at multiple levels. Why can they get away with this? Well, they just sit back and watch. They don't run in with the ECB fire hose because they benefit from a weaker euro, and there's political and economic change happening as we speak. While Athens and Rome and Madrid have been burning, you've seen political regimes change. Germany could have something to do with that. So I want to go to the brightest minds here in Chicago, Shiraz Mian, Steve Reitmeister, and Kevin Matris, to break some of this down. First of all, each of you pick one. Today's rally is Santa Claus out shopping, European about to get its act together, or just extreme valuations at S&P 1150. Shiraz, pick one.
Shopping. I think it's
Santa Claus shopping.
It's the good start to the holiday
Steve.
season.
No, Europe. The correlations over the last few months are very clear.
Steve?
I'm going to pick Europe.
Okay. Yeah. Sounds good. Nobody likes extreme valuations at S&P 1150. I kind of like that story.
Well, but that one's connected.
Yeah, for sure.
So let's put it. If there was no European situation, the market should be at 1350 to 1400 on the S&P 500. So, it's being compressed because of the European situation and what that might mean for our economy. So every time there's a little glimmer of hope coming out of Europe, we just spring back real fast.
Let's get Europe out of the way. Shiraz, there's this talk about integration, which is, they could do an end run around the existing EU treaty and, come up with something new, and it seems to me like Germany wins either way. Like either they get more fiscal control of Club Med, or down the road, they retain their strength with a small core Eurozone. Is that what's going on here?
Germany wishes it was that simple.
Okay.
I think that's the best thing that could happen to Europe. But I'm very skeptical. The question is that will 12, 14 countries give away their fiscal sovereignty, with Germany and Italy and France getting a runaround and not asking the electorate in those countries for approval.
So you say that this end run around the treaty will not work?
I'm skeptical. It'll be an excellent thing if Germany, France, and Italy and Spain could decide the fate of 14 other countries and give Germany the veto power over their budgetary approvals and budgetary integration. But I don't think it's going to happen. So it's a great thing if they can pull it off, but I'm skeptical.
Okay. Kev, I want to talk to you about global growth. The OECD, Organization for Economic Cooperation and Development, comes out and says, hey, global growth is getting worse now because of the euro crisis.
Right.
I know you were talking about that a couple weeks ago. What does it mean for global growth? What does it mean for the U.S.?
Yeah, first off, let me just say about Europe, I really do believe, I may be in the minority here, but I do believe that eventually you will see some kind of Eurozone bond put together. I don't think they're going to make an end run. They are right now in the process of making these little changes and tweaks to the treaty so they can do that very thing. Nonetheless, looking at the OECD, they came out earlier today. They reduced the global economic growth rate from 2.3% to 1.9%, but apparently that is only looking at the richest countries. If you were to look at the global forecast from like Morgan Stanley and some of the other big banks, they are still putting global growth rates at 3.5% for 2012 and nearly 4% for 2013. That is what's keeping the market supported and why the market keeps on being buoyed like days like today.
All right, we're going to come back in a second segment. We're trying to ease Steve into this. He's just back from the grill, but he did have it. He called it right last night on RTI. He said, hey, a slow, quiet market, don't short it, right? All right, we'll be back in segment 2. We'll talk more about U.S. growth.